The oracle offloads Apple, a sign of things to come. Warren Buffett, the legendary investor, has sent ripples through the financial world. Known for his astute investment strategies and long-term vision, Buffett's decisions are closely watched by investors globally. His company, Berkshire Hathaway, recently sold a large chunk of its Apple stock, a move that has left many in the financial community speculating. They sold nearly half of their holdings, a significant portion that has raised eyebrows and questions. This move has investors wondering, what does Buffett know? Is there something on the horizon that the rest of us are missing? Buffett is known for his long-term approach. He's not one to panic sell or make hasty decisions based on short-term market fluctuations. His investment philosophy has always been about patience and strategic foresight. So this move is significant. It suggests that Buffett might be anticipating a market downturn or some other major shift in the economic landscape. It suggests he might be anticipating a market downturn. The financial markets are always in flux, and even the most stable companies can face unexpected challenges. Apple has been a star performer for Berkshire. The tech giant has consistently delivered strong financial results and has been a cornerstone of Berkshire's portfolio. Selling such a large stake raises eyebrows. It's not just about the numbers, it's about the message it sends to the market. There are a few possible reasons for the sale. One possibility is that Buffett sees better opportunities elsewhere. Apple's stock price is very high. It has reached levels that some analysts believe are unsustainable in the long run. Maybe Buffett thinks it's overvalued. When a stock price climbs too high, it can be a signal that it's time to take profits and look for undervalued opportunities. The economy is facing some headwinds. Global economic conditions are far from stable, with various factors contributing to uncertainty. Inflation is still a concern. Interest rates are rising. These factors can have a significant impact on corporate earnings and stock valuations. This uncertainty could be making Buffett cautious. He has always been a prudent investor, preferring to err on the side of caution rather than take unnecessary risks. Whatever the reason, Buffett's move is a wake-up call. It's a reminder that even the best companies can be vulnerable to broader economic forces. It's a reminder that even the best companies can be vulnerable. Investors need to stay vigilant and be prepared for potential market shifts. Investors are now watching closely. They are analyzing every move, every statement, and every hint that might give them insight into Buffett's thinking. They want to see what the Oracle of Omaha does next. His next move could provide valuable clues about the future direction of the market and the economy. A sea of cash. Berkshire's war chest grows. Berkshire Hathaway, the conglomerate led by the legendary investor Warren Buffett, is amassing an unprecedented amount of cash. Berkshire Hathaway is sitting on a mountain of cash. This isn't just any mountain, it's a towering peak that has reached new heights. The company's cash reserves have swelled to a record $277 billion. This staggering figure is a testament to the company's financial discipline and strategic foresight. This is partly due to the Apple stock sale. Berkshire's investment in Apple has paid off handsomely, contributing significantly to this cash pile. But it's also because Berkshire has been selling other assets. The company has been strategically divesting from various holdings, ensuring that it has ample liquidity. This huge cash pile gives Buffett a lot of flexibility. With such a vast amount of cash at his disposal, Buffett can maneuver in ways that few others can. He can use it to buy new companies. Acquisitions have always been a key part of Berkshire's growth strategy, and this cash reserve provides the firepower needed for significant deals. He can buy back Berkshire's own stock. Stock buybacks can be a way to return value to shareholders, and with the current cash reserves, this is a viable option. Or he can simply wait for better investment opportunities. Patience has always been a virtue for Buffett, and having this cash allows him to wait for the perfect moment. Some investors see this cash as a sign of confidence. They believe that Buffett's ability to accumulate such a large reserve indicates his confidence in future opportunities. They believe Buffett is getting ready to make some big moves. Others are more cautious. They worry that the large cash reserve might indicate a lack of attractive investment opportunities. They worry that Buffett is having trouble finding good investments. The concern is that in a market filled with high valuations, finding undervalued assets is becoming increasingly difficult. Only time will tell what Buffett will do with all that cash. The financial world is watching closely, speculating on his next move. But one thing is for sure, he's in a strong position to weather any storm. With such a robust financial position, Berkshire Hathaway is well prepared to navigate any economic challenges that may arise. Warren Buffett's reputation as a savvy investor is well earned, and his cautious yet opportunistic approach has served Berkshire Hathaway well over the years. The company's history is filled with strategic moves that have paid off handsomely, and this current cash reserve is just another chapter in its storied legacy. As the market continues to evolve, all eyes will be on Buffett and his next steps. Will he make a bold acquisition, or will he continue to wait for the perfect opportunity? Whatever the case may be, one thing is certain. Berkshire Hathaway's war chest is a powerful tool, and Buffett's next move will be closely watched by investors and analysts alike. With a war chest of this magnitude, the possibilities are endless, and the financial world waits with bated breath to see what comes next. NASDAQ Stumble's tech sector feels the heat. The tech-heavy NASDAQ has been struggling lately. The index has fallen significantly from its highs. This is partly due to concerns about rising interest rates. Tech companies are particularly sensitive to interest rates. Higher rates make it more expensive for tech companies to borrow money. This can hurt their growth prospects. The NASDAQ's decline is a sign that investors are becoming more risk-averse. They're moving away from growth stocks like tech. They're looking for safer havens. This shift in sentiment could have broader implications for the market. Section 4, Rate Cut Relief. Fed takes action. The Federal Reserve cut interest rates in September 2024. This was the first rate cut in over a year. The Fed made the move to try to boost the economy. The rate cut was widely anticipated. It provided some relief to the stock market. The NASDAQ in particular got a boost, but it remains to be seen whether this rate cut will be enough to sustain the rally. The Fed is facing a delicate balancing act. It needs to control inflation without causing a recession. The rate cut shows that the Fed is willing to act, but it also highlights the challenges facing the economy. Section 5, Navigating the Storm Investment Strategies for Uncertain Times. In today's volatile financial landscape, it's more important than ever to have a solid investment strategy. The market can be unpredictable, but with the right approach, you can navigate through the storm. The market is facing a number of headwinds. Inflation is still a concern. Interest rates are rising. The global economy is slowing. These factors create a challenging environment for investors, making it crucial to stay informed and adaptable. Understanding the broader economic context can help you make more informed decisions. This uncertainty can make it difficult to invest. But there are still opportunities for investors who are willing to do their homework. Conducting thorough research and staying updated on market trends can uncover hidden gems. It's about finding those opportunities that others might overlook. One strategy is to focus on value stocks. These are companies that are trading at a discount to their intrinsic value. Value investing involves looking for stocks that are undervalued by the market but have strong fundamentals. This approach requires patience and a keen eye for detail. Value stocks are often overlooked during bull markets, but they can provide stability during times of volatility. When the market is turbulent, these stocks tend to hold their ground better than high-flying growth stocks. They offer a margin of safety and can be a cornerstone of a resilient portfolio. Another strategy is to diversify your portfolio. Don't put all your eggs in one basket. Diversification involves spreading your investments across different asset classes to reduce risk. This way, if one investment performs poorly, others can help balance it out. Invest in a mix of stocks, bonds, and other assets. This will help reduce your risk. A well-diversified portfolio can weather market downturns more effectively. Consider including international stocks, real estate, and commodities to further enhance diversification. Finally, it's important to stay disciplined. Don't panic sell if the market drops. Emotional reactions can lead to poor investment decisions. Instead, stick to your long-term strategy and avoid making impulsive moves based on short-term market fluctuations. Stick to your investment plan and remember that the market goes up and down, but over the long term it tends to go up. Historical data shows that despite periods of volatility, the market has a general upward trajectory. Staying the course can lead to substantial growth over time. Consulting with a financial advisor can also be beneficial. They can provide personalized advice and help you craft a strategy tailored to your specific goals and risk tolerance. Regularly reviewing and adjusting your portfolio ensures it remains aligned with your objectives. Staying informed is key. Keep up with financial news, market analysis, and economic indicators. This knowledge empowers you to make proactive adjustments to your investment strategy as needed. By employing these strategies, you can navigate uncertain times with confidence. Remember, investing is a marathon, not a sprint. With patience, discipline, and a well-thought-out plan, you can achieve your financial goals and build a secure future.